Hey everybody, welcome to Trading the Close. My name is Gareth Soloway and I'm right here in the office doing Trading the Close for Drew today as he is away on business. Now, first and foremost, what are we seeing? We're seeing the markets taking a beating today, a little bit of a late day pop, but this late day sell-off. So again, just to kind of replay it, markets were already down coming into the open on the back of trade war escalation. Essentially, NVIDIA comes out and they say, hey, we're going to be taking a $5.5 billion charge to our earnings based on these trade war and lack of being able to sell the chips that we want to China. All right. Yesterday we had Boeing come out, or China come out and saying we're canceling all our Boeing orders. We're not going to order from Boeing. So it's just back and forth, trade war escalation. So the markets were already down coming into the open. The kicker today was Jerome Powell speaking at 1:30 p.m. Eastern time. At 1:30 p.m. Eastern time, he came out and he said basically, hey guys, we are not going to be rescuing the market by cutting interest rates. We see no reason to cut interest rates anytime soon. And the market basically went into a tailspin. So if we flip over to the charts, we can see that again, this is right when he came out. Look, 1:30. 13:30 is 1:30 p.m. Eastern time. And sure enough, that's when the selling began. And then we got a nice, beautiful late day surge up. Listen, we're still down pretty significantly on the day, but we did see a late day rally in the markets on hopes for a press conference from the White House. Maybe, just maybe, they'll announce some sort of trade deal with one partner, and that gets the market going. So essentially what you're seeing here late in the day, this is short covering. Right? In other words, shorts were riding this down. They hear about a potential press conference and they said, you know what? We can't risk a major deal being basically revealed and then the market's ripping up on us. So let's cover our shorts into the end of the day. And that's where we are at this point. If we flip to the daily chart, again, down 2.2% on the S&P 500. Although, again, as I said, we are off of the lows of the day. NASDAQ 100 is down 3%. So a big down day there. But same thing, a big rally off the lows. Again, NVIDIA bouncing massively late in the day after being down as much as 10%. Take a look at this, guys. This is the NVIDIA chart. This is the daily chart. I want to go to the intraday. Look at this drop intraday. At the lows on NVIDIA, we were down 10%. Look at this rip-roaring rally in NVIDIA late in the day on hopes that a trade deal breakthrough has arrived. And now listen, tomorrow, we could be back in this office. I could be doing the game plan tomorrow morning and telling you guys, listen, there's no trade deal. The press conference was nothing, and the markets could be down 2%, 3% tomorrow morning. We just don't know. But this is the world that we live in now as investors. We have to be ready for tweets. We have to be ready for news press conference. We have to be ready for comments from Trump. All of these type of things are additional kind of hills that we have to climb above. And it's just part of investing in this world today. All right, so let's flip back to the charts and take a look. Here's NVIDIA. Look at this move, guys. Again, NVIDIA traded as low as 100.5. It's now back to 104 and change late in the day. That is a massive move up. And again, the NASDAQ 100 still down 3.1% on the day. So listen, 3.1% is still a big drop. But think about this. We were down almost 4.5% at one point today. The U.S. dollar continues to not be a safe haven. So this is continuing to be a major story in development. And again, what I mean by that is you can clearly see the trend line. And look, the high on the dollar was literally around the 10th of January, 2025, just before the inauguration. And look at what the dollar has done since, as essentially the brand of the United States is taking a beating. In other words, other countries are not so eager to be buying dollars or parking money in the safe haven, which is known to be the US dollar. Same thing in general with treasuries, right? Treasuries in general have been going down while rates have been going up in response. However, today we are seeing a little bit of weakness today in the treasury, in the 10-year yield, which tells us treasuries did draw a little bit of money into them today. There was a little bit more demand for treasuries. All right, couple other charts to go over here. Gold just continues to be a rock star, up $107 today. You don't see those type of gains on gold very often. The big level to watch, this is it for me right here, the parallel. The magic parallel, incredible lows here. And then go right to the bull market high in 2020. And what do we get right there? You're coming right up to that level, just around 3,400, give or take. We could hit that as early as tomorrow. That's only about $63, $63 away on gold. So it could be hit overnight. We'll watch and see. Is gold overbought? Absolutely. I mean, you want to just see overbought, take a look at your RSI. You bring up your RSI, look at where the RSI is, north of 80. All right, that RSI stands for Relative Strength Index. So again, it does tell us just relative strength, relative weakness. Overbought is generally anything above 70. Just keep in mind, you never want to say, oh, well, I'm going to short gold just because it's overbought. You want to look for divergences, all right? Now, short term, there's no divergence here, right? High, higher, high, higher, high. So you have high, higher, high, and higher, high. But a little bit further out, you could make a case, this major pivot high right here, where it was kind of like a hill with a valley on either side, that RSI is higher than the current RSI, even though price, again, has gone higher. So essentially, think about it like this, just to do some education. Here's a trend line on RSI, slightly downsloping, but price is upsloping. That is what we would call in the business a negative divergence, because price has gone up, but the RSI is flat or going down. And again, what that can tell us is that you're starting to get the masses in. So what I mean by that is the retail crowd is piling in now. And when you get the negative divergences, it usually signals the beginning of institutional unloading into that retail crowd. A great example of this would be Bitcoin. Bitcoin sees this often at the highs of cycles where retail goes frenzied and crazy about buying Bitcoin, but the big money is saying, oh, this is exactly what we need. We need the exit liquidity so we can unload it into them. And again, that's something very, very common that we see. All right, couple other charts to go over here today. After hours, we do have earnings from Alcoa. But Alcoa is slated to report at 4:15, so that was not, or we won't see that here. CSX, which is a rail stock, that is dropping on earnings in the after hours. Not a huge drop, but again, remember, J.B. Hunt was another railroad stock or transportation stock. They dropped on earnings yesterday after the bell and into today. And today, at least as of now, we're seeing another company, a railway stock, a transportation stock, that is falling a little bit on earnings. And the reason why I'm bringing this to your attention, it's not that CSX is going to impact the stock market tomorrow. It's not going to impact the stock market. No one cares about CSX in that respect. It's more, what is the transportation stocks telling us about the underlying economy? That's something we have to continue to monitor. You want to monitor those stocks, the technology names, and what they're saying. What are the bank CEOs? What have they been saying? All of these things, if you're a good investor or trader, you're paying attention so that you're getting an idea of where sentiment is. And again, it doesn't mean you're going to trade in that direction, but you might even use it as a contrarian indicator, right? At the lows, we know people are the most bearish, and then at the highs, they're the most bullish, and that's actually the time to go contrarian on them. Let's go to Bitcoin real quick. Bitcoin, again, continues to actually hold up relatively well. If we take a look at Bitcoin today, this is your daily Bitcoin chart, and we can see a move up here and then sideways consolidation, and Bitcoin is actually green today. Now, what are we seeing here? Well, in my humble opinion, I think that gold has gotten so much press about being a safe haven, a little of that has bled over into Bitcoin. And so even when the stock market falls dramatically, at least for now, and this could change, but at least for now, we're seeing Bitcoin hold up better, probably finding a little bit of that money from the stock market going into Bitcoin, whether it's institutional or retail. That's up in the air to find out, but it does appear it's happening. And by the way, it's a bull flag on Bitcoin. I still anticipate upside. Silver broke above key resistance right here. Nice move, although not huge. This is no gold chart, right? I mean, we're not seeing new all-time highs on silver, but at least in the short term, it broke above this resistance. We'll see if it can continue up into this area up here. And then if we look at oil today, oil is trading flat to positive. Classic breakdown and confirmation. Bearish consolidation. I still think it could trade back to about 65 to 66, and then we'll watch it from there. And then lastly, natural gas on the charts. Taking a look, nat gas has broken this key support, so that is on watch for a continuation down. For me, the big support for a buy is going to be right down here. This should be right around $2.97 to $3. This low pivot, these low pivots right here, that should be an area where I would expect a bounce, really probably a quick bounce, not a longer term investment bounce, but just a technical bounce off of that level. Let's flip back to the S&P, folks. taking a look. And again, the final numbers are in. We can even flip over to the S&P itself. Here's your S&P chart. So this is where we started the day, the little down move, the float, the sideways chop. Then Jerome Powell right here trashed the markets essentially by saying no rate cuts anytime soon. And then late in the day, the press conference comes out, or at least the chatter about a press conference comes out, and the market sees short covering into the end with the S&P rallying sharply off the lows. But still, let's be fair, still down pretty sharply on the day. NASDAQ ended down lower by 3%. All right, folks. So just to summarize, I'll be back for the game plan tomorrow. Drew was off today. He'll be back tomorrow to do trading the close with you guys. And as always, we are watching the data and the charts. And we're going to tell you what they say. Sometimes it's in alignment with our position. Sometimes it's not. But it's the charts, and they are the truth teller. The charts give us the probabilities. It's up to us to trade off of them, essentially. And that's what we're transmitting to you guys who support us so avidly. We appreciate every inch of you guys. Thank you so much for being our big supporters out there in the world that's filled by hype and narratives nonstop. Lastly, I want to turn it over to Lawton here. Hey, Lawton, how you doing? Lawton's going to tell us a little bit about something, and then we'll end it for the day, and we'll rock on. All right, we'll talk to you soon.
Yeah. Hey guys, Lawton here with Verified Investing, and I'm here to talk to you a little bit about Blowfin. It's our crypto sponsor. You know, a lot of people ask us what we use to trade, specifically cryptocurrency, and Blowfin is our preferred exchange. They have great bonuses, and they're actually running a promotion for all of you out there. If you want to learn more about it, go to our homepage, scroll all the way to the bottom, and click on Blowfin. Learn a little bit more about our exchange. With that being said, let me throw it to myself. Hey guys, Lawton here with Verified Investing, back with another Blowfin video. So a lot of people are kind of wary about crypto because it could be extremely volatile, and that's true. But what if I told you that Blowfin provides the optimal opportunity to see how you would do on a simulated account, all for free? So let's check out my screen. So on your Blowfin account, you can go here to futures and click on demo trading. Right here, you could trade on a simulated account. This is an account where they give you $50,000 and you can trade like you normally would. Of course, those $50,000 are not withdrawable. Same thing with your profits. But there's even a leaderboard, and they have demo trading competitions where you can actually get real money. But for people like me, when I first started looking at crypto, I wish I had this opportunity. This demo trading allows me to trade something. So let's go down here and let's say with hat, right? Taking a look at this chart, I think it favors a move to the downside. So let's say, and I'm using my simulated account, I want to put $10,000 into this trade. And a simulated account with 3x leverage. So let's see how I would have done. Additionally, I can add, let me make sure I get filled first. Yep, I can add my stop loss and my take profit levels in the same way that I would while using a live account. Again, guys, this is the perfect opportunity for those of you who have never traded crypto before and explore it for free with no risk to you. Thank you again to Blowfin for sponsoring this segment. Yeah, awesome. Thank you again to Blowfin for sponsoring our video. I think that's it for us today. You can catch us tomorrow on Garrett's Game Plan. Have a good day, guys. Take it easy. I'll see you tomorrow.